Hello and welcome back to the Mortgage Porter Weekly. I'm Rhonda Porter, a mortgage advisor serving home buyers and homeowners in the greater Seattle area. This is your update for the week of June 8th, 2026. Last week brought some positive news on the jobs front. The Bureau of Labor Statistics reported that the economy added 172,000 jobs in May, nearly double what economists expected. ADP and Revelo Labs both came in with around 120,000. And the labor market appears to be holding up as well. Job openings rose to 7.6 million in April. Continuing claims remained elevated. And Challenger, Gray, and Christmas reported a modest uptick in layoffs, with AI-related restructuring cited as the top reason for the third month in a row. On housing, Quotality is forecasting home prices to rise about 5.3% over the next year. And to put that in perspective, a $500,000 home at 5% appreciation gains roughly $25,000 in value. So a good reminder of why homeownership is such a powerful wealth building tool. And the situation in Iran continues to influence markets, including mortgage rates, so we'll keep watching. According to the Optimal Blue Index, the average rate for a 30-year fixed mortgage as of last Friday, June 5th, was 6.512%. Remember, the Optimal Blue Index reflects data from roughly 35% of mortgage transactions, which is lenders who use this platform to lock in rates. So this is an average. It's not a quote, and it's not current. This is from last Friday. So we don't know how these rates are being priced, if they have points or no points. And again, bottom line, it's from last Friday. So these rates are not valid. They are just intended to give you an idea of how mortgage rates have been trending. If you'd like to have a current rate based off of your personal financial scenario, please reach out to me. I'm happy to provide that for you. Here's what's on the economic calendar this week. On Tuesday, we have ADP Employment Weekly and the existing home sales. Wednesday, Consumer Price Index. CPI measures inflation at the consumer level, and it's one of the key reports that the Fed watches closely. Thursday is jobless claims and the Producer Price Index. Producer Price measures inflation at the producer level, which can be an early signal of where consumer prices are headed. Friday, we have consumer sentiment. Both CPI and PPI can move mortgage rates, so we'll be watching this very closely this week. And then looking ahead, the next Fed meeting decision is on June 17th. And right now, current odds are at 98% that the Fed will not make any changes to the Fed funds rate. And as we've seen, the situation in Iran and its current effect on oil prices may overshadow the economic data this week. And mortgage-backed securities this morning as of 11 Pacific time are slightly improved. So there is some optimism in the markets around a possibility of a peace agreement with Iran, which is helping the settlement. And we'll keep monitoring how that develops throughout the week. This week's spotlight is something that every buyer and seller and real estate agent should understand right now. And it's the difference between a price reduction and a seller paid right buy down. So let me give you an example here. On a $700,000 home with 20% down, if the seller cuts the price by $20,000, or if the buyer makes a lowball offer of $20,000, that's going to save the buyer about $101 a month based off of this scenario, an example that I'm using here. But if that same $20,000 goes towards a permanent rate buy down, the buyer will save about $271 a month. And that's a huge difference every single month. And it helps a buyer also qualify. You're going to open this up to more buyers, and you're also going to be able to offer a lower rate with something possibly with a 5% handle on it that can really attract potential buyers to your listing as well. So if you are a buyer and look to qualify or considering a price reduction or making a lower than list price offer, please consider a rate buy down. And if you're a seller looking at reducing your price, or a listing agent looking to talk to your seller, you might want to really look at offering this to buyers instead. So I have more information on my blog, or if you'd like to reach out to me to talk to me about it directly or run a personal scenario for you, I'm happy to do that. Thanks so much for watching this week's Mortgage Porter. And if you have any questions about your specific situation, whether you're buying, refinancing, or just exploring your options, or just trying to figure out where to start, I'd love to hear from you, even if it's months away. So please visit me at mortgageporter.com. Reach out to me directly. I'm always happy to help. Take care. Hope you have a great week. Hope to talk to you soon. Bye-bye.